Okay, so the next panel will be about newcomers. We know that there are many fintech companies that are coming to the market, but what do they mean for the conventional wisdom? Are they disruptive? Are, for example, big banks should be disruptive of this? Should they be dispersed? So I'd like to invite here the speakers, Mr. Mustafa Baltacı. He is the Secretary General Federation of Euro-Asian Stock Exchanges. He is committed to fintech industry as a volunteer and mentor. He has a big experience in financial markets as well, so welcome on the stage. And other speakers as well. Udayan Goyal, please. We'd like to have you here. He's a keen proponent of technology-driven information in banking and financial services and has exceptional domain expertise in the space. He is the co-founder and co-managing partner of APIS Partners, so you're welcome as well. And the next speaker is Jay de Groot. He's the Vice President EMEA of Moven. I'd like to have you on the stage, please. And at last, a lady. Please, welcome on the stage. I'd like to shake your hand personally. Thank you. She is Elsa Pekmez Atan, and she is from Finansbank Empire. So welcome, the stage is yours.
Thank you. Thank you very much for this very nice introduction. I believe the introduction was meant to be for the speakers, but let me sort of open the session by introducing the companies that we are representing here, because since the very early morning we've been discussing about the fintech. The very concept of it, I even find myself quite confusing sometimes. I believe we are referring to a very broad concept here, right? And fintech and the banking, I believe, the payment transfers, quite fine. But when it comes to banking itself, the very structure of banking, I believe, well, we are meaning something quite serious, right? So it might be quite better, to first understand who we are representing and what kind of businesses we are executing, back at our home. So I would like to sort of turn to each of the speakers to introduce their company so we can have a better understanding in terms of what we are discussing today. Udayan, why don't you speak?
Sure, thank you. I don't know if you can hear me. My name's Uday Goyal. I'm actually the founder of two investment vehicles. The first one was a company called Anthemis Group, which I founded in 2008, 2009, and really was the first global investor in what we now call financial technology, and I'll come back to why I hate the word financial technology, but it was really the first global investor. I was the seed investor in this gentleman's company, as well as 32 other investments that, including banks like Fidor Bank in Germany, a company called Betterment that you may have come across in the robo-advising space, Currency Cloud. So many companies that are now becoming synonymous with financial services and financial technology. And more recently, I founded with my partner, who you'll see later on today, a company called APIS Partners, which looks to do financial services, technology-enabled companies, but in emerging markets, and particularly in Africa and South Asia, because I believe now the real wave of innovation is going to come from those markets, not necessarily, for many reasons, from the developed markets. There's a dichotomy there and something worth talking about.
Thank you. Jay?
So, as said, Anthemis Group was a seed investor in Moven, founded by Brett King, probably well known for his books on how we should disrupt banking in general. I know Brett from my time actually at Backbase. I started at Backbase, portal technology company for the financial industry also. In 2008, helped create the proposition they currently have. That's where I met Brett and Alex, the two founders. And I think just 2 months ago, I asked, when are you guys actually coming to Europe, really coming to Europe? And me sitting here representing Europe probably means we are. Moven, why it was interesting to me actually to start working for Brett, not because him as a futurist and a guy with a vision, but also created something tangible. To have a vision somewhere where banking should go is one thing. The other thing is also making it tangible. So for retail banking and millennials, Moven created an experience. A lot of banks, see one thing of Moven being a spending meter, how you're dealing with your cash management of the month, and they say, oh, you're a PFM. We're not. The spending meter is just the initial trigger, the behavioral design we use more or less to get millennials engaged in what we do, and we created on top products that are more relevant to let's call it relevant, depending on how you look at it. relevant for the millennials, basically to go out and do more savings, make sure they're more aware of how they spend their money, and just create a next step on how banking should look like and creating products around it. A lot more to tell. Short version though.
Thank you. Hasan?
Hi, my name is Elsa. I'm here representing the Empire team. For those of you who are not very familiar with Empire, Empire is Turkey's first branchless digital bank. We are actually a part of a brick and mortar bank. I mean, digital bank is not something new. The fact that it's part of a brick and mortar bank, it also makes it more interesting. It's a separate brand, but we're part of a bigger bank. We started 3.5 years ago. We don't use branches as a service channel. We only serve through digital channels, and we've reached 500,000 customers. Some of you might have seen our ads in 3.5 years. I mean, the model is not new. It's been applied before, and it's basically the main proposition is, since we don't use the branches, the costs are lower, so we share this cost advantage with our customers with lower fees and better rates. But I think what contributes to our success is not the financial advantages, more like we try to revolutionize the customer experience in making banking simpler and more transparent, which was demanded by the customers, and making it easier. Most of our customers hate going to the branches, and every time, yes, they already were using the alternative channels of the existing banks, but one way or another, they were supposed to go to a branch at some point to change a passport, to get a new card, or basically they need a signature for something. So we started saying that we're going to change this. We're going to create a bank where a customer will not ever have to go to a branch. And we committed to purely branchless banking, and that's what we did. And so far it's going
excellent.
very well.
I'm not a banker by profession. I believe the organizers, put me in this chair on purpose to ask you some sort of stupid questions as a person on the street. But I have some observations, to be honest. And what I can tell is that I believe the number of branches of the banks, right? We are seeing a downward trend, right? And I remember statistics in the UK. Since 1990, in 25 years, the number of branches has gone down almost twofold. So this is a very dramatic, decrease. So people, as well as banks, and the infrastructures, they are providing services mostly through branchless services, right? So this might be the first observation. Second one is, we are talking about these millennials, generation X, Y, Z. Even my son, he's talking about some vloggers on YouTube. He's only 10 years old. I have never heard of him. PewDiePie or something, some guy from Sweden. Perhaps you know him. So he has 40 million subscribers. Amazing. It's almost half of Turkey. So this is we're talking about this transformation and evolution by nature. But in Turkey, since we have these strong demographics, right? We have almost 40 million people under 30, which is amazing. But number of mobile users, mostly smartphones, they are tending to use also mobile financial apps, right? I think it is the highest number comparing to the overall Europe, as well as the US and Australia. I think it's around 65%, amazing. So there is this, inclination towards more mobile banking and everything. So this might be the second thing. I also came across an article. They put together a list of financial apps downloaded by consumers in the US. So within the top 10 list, the number one is definitely not a conventional bank. For example, Amex made the list by the 10th, right? So we are seeing some changes here in this marketplace. But as a person on the street, I really like to know what's in it for me. Why are we having this, discussion? And Jay, rightfully pointed out the fact that you are disrupting the banking. How? How do you guys do it? Why don't you start today?
Well, I think there was a lot of discussion in the earlier panel about the synergistic effects of companies that are innovating in the front end of the space versus the back end of the space. I think if you take a step back, you have to take a quick step back, right? I think there's a lot of discussion to say that companies like Moven are going to put the banks out of business. That's absolutely not true, right? So you have to remember, when you touch money, right, it has to be regulated. And the reason for that is that if money gets lost, it's the taxpayer in every country that's ultimately going to underwrite that loss, because you can't have a gigantic sum of money disappearing and the taxpayer not backstopping it, or you'll have revolution. And that's pretty much the same in every country in the world. So the minute you have a situation where a regulator is responsible for the safeguarding of cash, you'll have a regulatory layer. Now what's happening is we're seeing this disaggregation of what has been typically an industry that has been characterized by vertical integration. So financial services as an industry until very recently was highly vertical integrated. So was the car industry till the middle of the 50s. General Motors used to actually make its own steel, press its own steel, every component. Today, not a single car manufacturer makes everything, and most of them are pretty much design and marketing hubs where everything else is outsourced to component manufacturers. They put it together and then they focus on the design and marketing. It's exactly the same as what's happening in financial services. One of the components of financial services is the regulated repository of cash, or the regulated repository of certain functions that are considered to be moving money from A to B. And what's happening is that there are a number of companies like Moven and others who are coming to sit on top of that, using those services as a wholesale user of those services, much in the same way as if you're a bakery and you buy flour to make your bread and sell it. It's not that dissimilar. They're using those wholesale services, repackaging it, right, and selling it out to consumers, but giving the consumer a much better customer experience. Because the point about downloading apps is we're now habituating ourselves to move towards a very different usage paradigm of financial services, which is much more contextual, which is much more related to why you need it, not because one day you wake up in the morning and you decide to go to your bank branch because you want to buy a loan. Typically, you wake up one morning, you buy a car, and then you need to buy a loan that goes behind that car. So we have to contextualize these services. So that's the kind of breakup that we're starting to see, and that's what's now becoming very pervasive, and that's driven by one final factor, the fact that today we all have something in our pocket called a mobile phone. And because we have in our pockets something called a mobile phone, we no longer have to rely on physical distribution infrastructure to get access to these services. And so that's really, in my view, why the ecosystem is getting built up.
Jay, would you agree with that?
Yeah, fully. It's not hard to agree with. You know, it's I think a lot of the speakers before talked about creating a better user experience. Most banks still, so I would say, you know, the problem with thinking out of the box, whenever they say we're going to start thinking out of the box is still the reference model. So banking are still digitizing the products they have just for another channel. And, you know, it's working, as it seems. You know, there's a lot of mobile banks out there from the traditional banks, but no one really started trying to look at the other angle. You know, what does the user want? So if you want a bank for users, what kind of experience would you create? You know, and you won't be able to do everything at once because of regulation, for instance, one of those things. But you know, just taking the outside-in look, I think not a lot of banks did that so far, and that's where fintech comes in. Also, try to shake them up a little bit. I also don't believe banks are a dying breed. You know, branches might be. You know, they won't go away totally, but you know, the banks that still rely on revenue from branches probably will be in trouble. If already they are probably in trouble. So just creating the so user experience to me is what kind of perspective do you take creating the user experience? And most banks so far take the product as the initiative and not the user. So and that's where I think companies like Moven or Fido or Number 26 come in and just push the banks a little bit further out, or to do it themselves, or work together with fintech companies like Moven to make that next step also.
What do you mean by a little? Because, I mean, I am also very confused in this respect. I mean, since we are talking about disruption or innovation, however you coin it, right? So we are talking about the different structure in 10 years from today, for example, in the market. So if it is a little, how much a little is?
So, you know, the term disruption is, I think it's a little bit off.
Okay.
If you want to if you want people to change in their behavior, it always goes in little steps. So for the banks, it might look like a disruptive step, but for the end user, it's just a little step.
Okay.
Why? Because it started with e-commerce, and it started with travel, and coming to banking. Then also, for them, the experience we create more or less is nothing new. The reason why Alipay does so well, because it makes sense in your chatting app to do a payment, for instance, because you're already talking to your friends up there. So for them, it's a little step. It's not disruptive. For a bank, it's totally disruptive.
So by user experience,
yeah.
It is also going to be for you this question. I mean, because Enpara is a very innovative product, and there are also some similar products in the Turkish market as well. But
yours is the best.
This user's experience, it has been brought up many times this morning. So what we mean by user experience is perhaps a better quality service, right? As well as lower cost, since people keep complaining about the transaction costs and everything in many marketplaces, including Turkey, right? So are we talking about a better landscape in terms of these two criteria when the fintech banks will be there? Why don't we start with you, then we'll move on to you.
Yes, better cost is definitely a better thing for, lower costs and better rates are definitely a better thing for the customers. But as I said, what they value even more is a bank that understands them. I mean, that's what you're trying to do, and we're trying to do it to an extent. And they want the bank to make their lives easier, and it's small incremental changes sometimes that makes some little really small things that we did that attracted a lot of attention. They were not like, to be honest, we don't have any new technology. We use the bank's existing technologies. We didn't do anything, we didn't use any new technology, but we thought differently than the rest of the bank. I mean, as you said, we are part of the bank, but we were a team that questioned why are we doing this thing the way we're doing it? I mean, there is always, what fintechs do is more or less the same. They're looking at the existing thing and they're questioning why is it done this way? Is there a better, easier, less costly way to do it? Which also helps the customer. So that's what we try to do at Enpara inside Finansbank, but Moven is doing it outside the banks, trying to sell it as a service to the banks. We are trying to do it in-house, but it's always asking the question, how can I make the customer's life easier and better? I
think Danish government has come up with a very good land register model only very recently. It is completely personless in a way. It is completely digitized, automated, and a person can easily execute any transaction with another person on an online platform, including the mortgage lending, including the land registry with the relevant government entity. So will it be okay, or will it be doable someday with the banks? I mean, as a person again on the street, will I be able to open an account without going to any branches? And is it possible in Turkey today? No?
Well, our customers don't have to go to branches, but we still have to go to them because there is a wet signature requirement in the Turkish regulation. But it's also, if we can, I'm hoping that it's going to change as well, because it's changing in a lot of places in Europe and the rest of the world. There was a gentleman here, he was just telling me yesterday that the German regulator has already agreed to allowing a KYC through remote channels. I mean, if it happens in Turkey, of course we're going to do it right away. I mean, if it's possible, and it opens up but it has to be a secure and way. I mean, we have to be 100%, or not 100. Nothing is 100%, but we need to be pretty sure that it's working and it's not open to fraud or anything. But then, yes, it should go that way. I mean, it's really. I mean, for us, sending a person to make a customer, it's still very costly. I mean, it's still less costly than having a branch and paying a huge rent for it. But still, we need to have some people to go there.
Okay.
So now, by the way, this is something that's changing rapidly. It is only the legacy markets which have this issue around KYC and signing up. So let's take India for an example. India today, the entire population is biometric information is stored in a central database. So that's the entire population, billion people, on a biometric database. So there's no more KYC requirement. You walk in, your fingerprints, your retinal scan, or your facial scan is enough to be your KYC. That can be as much as taking a selfie on your cell phone. It can be a portable fingerprint scanner, which costs $10. It can be any one of these things, and so the whole value chain has become digital. And not only that, you have real-time payments, which means from account to account is absolutely in real time. So you all more or less obviate the need for any last mile touch point, with the exception of ATMs, interestingly enough, because that gives the customer the feeling that what he's putting into this digital universe is tangible, because he can always take his card, put it into an ATM, and out comes cash, which that's what people are used to. So that's very important for people to have that mental stability.
Sure. Well,
but I just read an interesting article the other day that having all the biometrical information stored in a central database is also very open to potential cyber attacks. I mean,
True.
that's...
If it's central, that's that.
as long as it's central, it's like...
I would argue that's no different from having our financial information stored by banks. And if Bangladesh can lose its money with the Federal Reserve Bank of New York, then look, we got bigger issues out there.
That's true.
so Jay, do you provide such services, going back to the previous question?
Well, digital sign-up, yes. I think
okay.
we were the first neobank also in the US to do a fully mobile digital sign-up. And the funny thing is also, to me, it feels more secure, because we have the address you fill in, and the photo you take together with an ID card, the selfie, has a geotag also. And if the geotag of the selfie and the address is just too far apart, a flag comes up, and someone does some research online on social media, try to figure out about the person. If not, you get some extra questions to fill in.
So you don't require any verification of utility bill or something like that? You don't?
No.
That's fantastic.
So it's you can sign up within 2 minutes. It
Wonderful.
probably takes another 24 hours to activate because of the KYC requirements, but it's just getting better and better. And the other thing you said also on the user experience, going back one step, where you said when people nag about the prices they have to pay for transactions, for instance, that's just the moment it's a commodity and people start talking about prices, you don't add value. So the moment people start talking about I have to pay too much for this, then banks are in trouble also, because they don't feel the real value of the bank anymore. And then that's where fintech companies come in and try to help more or less the industry itself to give it a better image again, maybe to facilitate what consumers really want. If we are retail, so a lot more in banking, but regarding retail, I think that's where fintech comes in.
But we are talking about a fully licensed, fully regulated company here, right?
Moven, no. We're
No?
just what we call in America a neobank. So we're a mobile app
Okay.
on top of someone else's license. So we don't
okay.
have the the books.
All right, but it is licensed at the end of the day.
Yeah, no, for sure.
Okay,
Yeah.
all right. What about Fidor? I mean, you invested also in Fidor.
Yeah, I mean, we've invested in Fidor, also Atom Bank. So all these banks are slightly different. So of all the investments, so the first one I did was Simple, which now BBVA bought, and Simple was really the first neobank.
Okay.
We went and used the regulated institution from somebody else to keep the money in. Then actually the second one, funnily enough, was Moven. Again, regulated institution sits behind. Fidor was a different experiment, because in Europe, because these were both US, in Europe the regulator hadn't quite got to grips with this concept of having somebody control the customer and the money sitting in a regulated institution.
Yeah.
So Fidor was an investment we made because it was a way of experimenting around having the whole vertical integration chain, but with the view that over time we would split it. And indeed, that's what's happened. Over time, Fidor is now becoming more of a technology company on one hand, like Moven is, and a regulated institution, which is more the product development lab, where you're testing out products for the larger institutions to use, which is pretty much what is happening on the Moven side. So, and then Atom takes a slightly, which is a challenger bank in the UK, takes a slightly different view, I think a little bit more like yours, which is they actually want to be vertically integrated because they believe that the product development cycles and the ability to get products out into the market quick enough rely on the fact that you need to control your own regulated institution. Now, people can have fundamental differences, but I think all the different models can coexist, and there's a place for all the different models within the market.
So, well, again, I just like to make it quite simple, I mean, for my understanding again. For example, if I invest in Bitcoin, one of the challenges with Bitcoin up until today is that you cannot move it from a Bitcoin exchange to your bank account, right? There are some difficulties and there are some service providers trying to resolve the issue. So let's assume that I am signing up with one of those banks or with Movin. What would be the abilities that I can do? I mean, comparing to any conventional bank here.
Let me take that. Well, Fidor you can. And the way that works is actually...
It is called bank, right?
It is a bank, and you can. And the way that works is slightly different, right? And that's one other thematically something that's happening with the sector as a whole. And that's what basically the whole concept of open architecture. So what do I mean by open architecture? So you have a institution that effectively provides a core set of products itself, but then will collaborate with outside institutions to provide other products. So for example, the first product that Fidor collaborated with an outside institution was gold. So it was a time when there was a lot of currency speculation and people wanted to invest in gold. But even for me in the UK, it's very hard to invest in gold because I have to get a specialist broker who's going to buy physical gold, store it in a vault for me. So what Fidor did was cut a deal with a specialist gold broker so that in your current account, there would be a button that says you can buy gold. And immediately you buy the gold, it transfers the money to the broker holds it in a regulated repository, and then whenever you want to sell it, you can press another button. So this is very much the whole idea of open architecture. And in the same way, they have a partner for Bitcoin, they have a partner for all these different kinds of products. And I think we're going very much into an age where this idea of open architecture, where it's a portal-based approach, and there's a single regulatory umbrella that potentially sits over that, but you're basically allowing people to connect either into your own services through an open API, or actually to other people's services that are then coming into your portal, is probably where the future is.
Yeah, well, as I said earlier, I work for Backbase, and he's telling the Backbase story. Make sure whatever core banking system there is, whenever you want to integrate with other people's technologies, you use the web-oriented architecture for integration, but make sure it's your own experience. I was just wondering if Fidor used also a gold button for actually buying the gold.
Yes.
Yeah, it makes sense. Sorry,
So-
just curious.
We can sort of conclude the discussion towards the Turkish experience here. But before that, in order to make us, sort of provide us with a good comparison. So I just like to draw a picture here in terms of, again, a regular person opening an account with one of these guys, right? Fidor, Atom, or Movin. So I have an account, so I transfer my money into one of these banks. So what are the things that I can do? Can I deposit my money there? Are there any interest returns? Are there any investment possibilities? Can I lend from the bank? Are these available within these structures?
So investing, not yet, no, and also lending, no, but lending is something we will do actually second half of this year.
Okay.
But for small amounts.
Okay.
Again, we bank mostly for millennials, so facilitating their life and trying to influence their habits on how they do their cash management, for instance, is not similar with than also lending large amounts of money. So it might happen in the future, but little steps first, and then investment or even smaller investments with the money on savings that you have, or loans might come later.
Okay, so I cannot sign up for Movin since I'm not a millennial, right? I'm above the age.
You can sign up like I do, but it won't work because you're not an American citizen. You don't live
okay.
or
All
in
right.
Canada
Yes.
or in Westpac where we work with partner banks.
But that's a complete misnomer, just so we're clear,
Okay.
right?
Yeah.
So if you look at Fidor's customer base, so actually even if you start to take down into Movin's customer base, the biggest customer base for Fidor is actually the 38 to 52-year-olds,
Okay.
right? So these are digitally savvy professionals who have grown up with the internet, who want the convenience of being able to use these. So this concept that these services are purely for millennials, I reject. Because actually, if you look at all the demographics that have come through, that's the way. On your earlier point, very quickly, yes, you can do all of the above. You can invest, you can do peer-to-peer lending actually through the Fidor platform today, which is what you guys are going to do later on.
Yep.
You can do peer-to-peer lending, which is you can go into it. They have a connection into a peer-to-peer platform and you can actually put money. Interestingly enough, you can even lend money to your friends as long as they're both customers. So, but then the bank disintermediates it and does the collection on your behalf.
Yep.
So there's a whole bunch of services that you can do pretty much across the board by being
I sense a
trusted.
disruption here rather than an innovation. I mean, so coming back to the Turkish experience, I guess, I mean, the regulation is one of the keys here, since we don't have fintech banks like Movin or, Fidor or Atom or Number 26 in other countries like this. So how do you see the regulatory framework, innovation in the banking, and what would be the future, in 5 years from today, in terms of the overall outlook?
I mean, our vision at Finansbank is that in 5 to 10 years' time, Empara is going to replace Finansbank's retail banking arm at some point. I mean,
Okay.
all the current Finansbank retail customers are going to behave like Empara customers. So the two platforms are going to merge one way or another.
So you're disrupting yourself.
Well, yeah, you can
Okay.
say that. Yeah, I
Okay.
mean, but it's not a real, I don't know if it's a real disruption. The term really makes me
Let's use the word replacement
uneasy.
or re-engineering.
Well,
Nicer words.
we created Empara as to start the future for us. I mean, we wanted to be the first mover in this segment, and as Diane said, like our customers are not millennials, mostly like 30 to 45-year-old, young, but still not not millennials, and we offer the simplicity and the transparency that they required, and they prefer to work with us. And it's like they really don't want to go to branches, so we don't force them to go to branches. It's a big plus for them. And the less people use the branches, the more they work like our model. I mean, and we are less costly and more efficient.
But I think the competitors that you have in the Turkish market are other banks rather than some, newcomers like.
But in Turkey you need a license to do it.
Exactly.
So that's
exactly. So the regulation is putting you at a safe side, I guess, right?
Yeah, I mean, anybody can apply for a license and create a digital bank. I mean, they don't have to open branches.
So
I mean,
for example, Fidor or Movin subject to the same, application criteria as a bank?
When we move to Turkey?
Let's exclude Movin from this discussion. For Fidor, for example?
Well, I mean, Fidor, if it could do one of two things, the more likelihood is it would partner up with somebody with an existing banking license and use that banking license.
Okay.
Yeah.
Because remember, a banking license is a fixed cost instrument, right?
Okay.
So the more volume you put through it, the more economical it becomes. And
But
by
the
way,
initial capital requirement is the same number with a
yeah,
bank.
but that's the whole reason why you wouldn't set up
Okay.
your own, right?
All right,
Going
sure,
with somebody
sure,
else's.
sure. Okay, good. Well, we are out of time, so I'm sure we need to, wrap it up. I'm afraid that we cannot receive any questions at the moment, but this is a very interesting discussion for me. I learned a lot because fintech banking, let's put it this way, again, I don't know what really fintech means, but fintech banking or new, innovative ideas in banking is going to, engage us in a deeper discussion in the coming days. I don't know what would be the outlook in Turkey, but we might, see some, again, new and innovative ideas to contend the conventional wisdom. Thank you very much for your attention. I also thank to the panelists for the